Good morning and good to see all of you. And let's dive into today's lesson. I hope you can hear me.
Yes, we can, Director.
Yes, we can.
Loud and clear.
So today we want to deal with your biggest expense and how you can deal with your biggest expense and turn it into an advantage. Two things that are expensive for you as business people: one, payroll, and rent. In some cases, those two take up to between 25 and 30% of your sales. I don't know whether you know the percentage of your payroll to income. Maybe type in the chat what your percentage is. If you don't know, this is homework for you to find out what your percentage to payroll is, which is very helpful for you to know. Because I'm digressing, because if you do not know, then it will be very hard for you to know whether you're really profitable off the bat, how much margin you should mark up so that you're able to, let me give you an example. So if those two are 30% and you're marking up 25%, you're dying. Only that you're dying slowly. Someone said that sometimes you die so slowly that you think you're succeeding. That's the problem. So payroll or compensation, let's turn our guns to that. Have you ever heard these comments? You might have exclaimed these sentences and said that I gave a bonus to everyone. I gave a bonus to someone. Now everyone wants to come, is making their way to my office to get a bonus. We just increased payroll and nothing has changed. We increased payroll and nothing changed. Just the only thing that changed were expenses. Or have you ever told yourself, I feel I want to sack everyone and pay them by commission so that everyone earns what they from what they make? All those are exasperations of an entrepreneur, which are normal. But I hope, like in the next 20 minutes, we'll be able to, get our heads around some aspects that we can put in place. First thing, compensation itself is a bad word. Compensation means pay for suffering at work. Compensation also means something, typically money, awarded to someone to recompense for loss, injury, or suffering. So straight out of the gate, you're fighting against gravity. And even the very definition of the word compensation also falls short. There are companies, I want to give you a couple of stories before we dive into these principles. There's a company called Harley Davidson. They make motorbikes, really big and expensive motorbikes. But recently, they decided to give all their employees stock options. That means that employees became part owners of the company. Just think about it. Is that good or bad? Put a question mark. There's a bank called Bank of America in the US. It was giving its employees $750 bonus at the end of the year. What it did, instead, got the same amount of money and put up $1 billion as stock for the employees, and it has to vest for 4 years. Is that a good thing or not a good thing? I just ask you to think about it. How can we use the same pool of resources that we have? How can we get more from our people without necessarily increasing the payroll and without necessarily breaking the bank? A few things to note when we are talking about compensation. Number one, that social envy is very present at the workplace. Social envy is very present at the workplace as people take pay as a proxy for self-worth. Regardless, people feel their worth they are worth more when you pay them more. They are worth less when you pay them less. And so compensation is pricing internally. It is your payroll is like your price list, an internal price list. Leave alone the price list you have for your products, but the payroll is an internal price list for the people that you have. Number two, we must note that people are not logical. They are psychological. People are not logical. They are psychological. There's a study that was carried out, and people were asked this question: would you rather earn $50,000 a year in a society where the median income is $30,000? Okay, so we are comparing 50,000. You're earning, Rosemary is earning 50,000, where the median income in her home area or where she works is 30,000. Or would you rather earn 100,000 where the median income is 125,000? And guess what? 46% of the respondents answered that they would rather earn 50,000 where the median income is 30,000. So people would rather earn less, knowing that they are better off than others, than earn more where they think that the others earn more than them. I don't know whether you get that point. When we talk about culture, this is another thing I want us to take note of. When we talk about culture, many cases we want to say, oh, this is our culture, this is not our culture. But if you get one thing out of these next 20 minutes, is this, that in large part, culture is a product of compensation. We cannot talk about culture without talking about compensation. And so we can make noise about culture, but compensation will dictate the culture that we actually create. And in many cases, we think that compensation is a transaction between me and the employee. But no, compensation actually is a transaction between you, the employee, their teammates, and the customer. Why? The role of the compensation system is to incentivize behaviors in your employees that your customers appreciate and make them reach for their wallets. If the compensation system does not change behavior that increases your bottom line, then you have a broken compensation system. But good enough, there is hope. Lastly, compensation system can also be used to attract and retain talent. So we'll look at 5 principles. Some of them are dealing with group compensation. Some of them deal with individual compensation. And here we go. Number 1, principle number 1. If you have to really maximize your compensation and get most out of it, decide to be different. Be different is principle number 1. If you're paying the same way as your competition, then you're not any different. And you will get the same results as your competitors. We have to have a predisposition to hire strange people. Let me give you an example. So, how many of you pay per piece? For instance, you make a widget, you make a shoe, or you make a dress, and when the dress is done, you pay a commission off the dress. And the more dresses someone makes, the more you pay them. And you have, let's say, 10 employees all making dresses. But sometimes you have to adopt a piecemeal strategy where you're paying per piece made. Now, your pay structure has to align with your culture and your strategy. I'll give you an example. So there's a company in Ireland called Citybin. Citybin needed, they go collecting, garbage around the houses, but they needed an assistant to the driver. So the driver drives, but the guy who jumps off the truck gets the garbage, throws it on the truck, and cleans up the place, and then they continue serving other customers. So they realized that there were very few people who really wanted to do that job. But what they did was they found people who were in the gym and who were athletic. And their advert attracted those people because the guy who is the assistant driver for the truck, one, you must find people who take fun and enjoy carrying a very heavy, load of garbage and emptying it onto the truck and then running after the truck to catch it. Because normally those truck guys don't stop for you. So you have to chase the truck and then get the other one. So in a way, some form of training for their athletic ability, but you make the job part of the training for their hobby or for what they really want to be. So that's where they got their talent from. I am told that one great person is equal to 3 good people. And so you must find your strange workforce. Just when you think that job is boring, there's someone who really enjoys doing it and loves to do that boring, mundane work. Which leads us to the aspect of the good job strategy. You might have heard of it. I want to say how many of you have heard of good job strategy by a lady called Zainab Ton. The good job strategy, I think we'll talk about it in a separate session. But the idea is that we can actually create an environment where we pay people well and we actually make money at the end of the day. You don't need to compromise one for the other. So the idea behind this is that you can actually increase your pay, but the total cost compared to your income actually comes down. In other words, you can get one person who does the job of 3 people and pay them twice the money, and you still be profitable, and yet you're the highest paying person in your field. The test is to convert customer expectations into behaviors at the end of the day. So how different is your pay structure? How different is your compensation compared to your competition? Number two, fairness, not sameness. Fairness, not sameness. This is a very interesting quotation. There is nothing more unequal than the equal treatment of unequals. I'll repeat that. There is nothing more unequal than the equal treatment of unequals. And the idea is that how are we paying across the same band of people? The recommendation is, if you have people you're paying, let's say you have salespeople, and you're paying your salespeople the same amount of money, you're leaving a lot of money on the table. And so the recommendation is that we have wide-based bands. How do people move from one band to the next band? Do you have an elaborate process? Do you have various steps within and among the salespeople? Do you have 5 measurable gates to move to the next band, in which, in most cases, the next band should be able to earn about twice what the lower band is earning? Now, in many cases, we have, let's say, 50, maybe, let's say 10 salespeople, and we pay salespeople all the same. And there is a salesperson who, the best salesperson and the worst salesperson being paid the same would really demotivate the best person, and they would at the end of the day be at best mediocre. But is there a way we can create small steps such that people are able to move through, even if they are all salespeople? Let me give you an example. If you have salespeople, 5 salespeople, then you have to establish the qualifications for entry level number 1, level 2, level 3, level 4, and level 5. Such that these 5, even if they are all salespeople, they are actually earning different. People must aspire to go to the next level. If that level is not there, or if it's too wide, then people will not be able to give you the best. The thing is, how do we judge best pay? Best pay is based on 3 things. Number 1, competencies. How competent is the person? Make sure that we recruit competent people. Number 2, sustained performance. Just killing it in January alone doesn't mean that you are a good person. Number 3, relative labor market value. If the labor market is paying a certain amount of money, then our best pay must be able to incorporate this: competence, sustained performance, and relative market labor market value. Let's move to principle number 3. Principle number 3 is stay easy on carrots. Now, 97% of executives believe they are among the 10% top performers. Let me repeat that. 97 of executives believe they are among the top 10% of performers. Is that correct? And yet only every executive thinks they are the ones who actually make the numbers possible. And yet only 37% of executives are actually high performers. So how can we rectify that? We have to rectify that with really streamlining this. Let me give you an example. You would wonder why people go for the Olympics if, let's say, for the 100 meters race, and only 3 people get the medal. And yet so many people worldwide are really running and planning for this event. It is that the Olympians are there to improve their personal best, not necessarily win. And so the leader or any leader's role would be to help everyone get their personal best or improve their personal best. And this is where the role of compensation or financial incentives comes in. Number 1, good financial incentives should have a selection effect. A selection effect makes the employee ask this question: do I want to work here? Yes or no? Number 2, an information effect. In other words, they show what is important. By working in your company for 1 week, I should be able to see what is important in that company, because the compensation shows that we actually pay people like this or more people like this. 3, the motivation effect. In other words, at the end of the day, compensation must make people work or try to work harder. Principle number 5. By the way, all these things are in a book called Scaling Compensation by a gentleman called Van Harnish. Yeah, you can buy it off Amazon and read it more in depth. I'm just skimming through all this so that I whet your appetite, but this is no way as much as what is in the book. Principle number 4, gamify the gains. Okay. Now, if any of you has gone to the casinos and played or won something from there, it is the uncertainty and the dopamine rush that causes people to actually go back over and over and over again. Let me help explain it this way. There's a moving company. There's a moving company that you move a customer's, someone moving house, say from Chaliwajara to Natete. So you call these moving guys, they get your mattresses, cupboards, and whatever, and pack them and then move them. And so they had the insurance just in case they break your TV or break something. So the insurance would pay. And so what these managers did was, insurance is anywhere around 3% of turnover. So what they did was to get the 3%, instead of buying insurance and actually giving it to the team. What ended up happening is that the team became self-policing, and the team were able to expel a new hire who couldn't match the norms and ethics of the team. The team was so interested in making sure that they don't break anything because they were being compensated instead of paying for the insurance. So what did this help? It helped on the selection effect. Do I want to work here? Yes. It helped on the information effect. We all do not want to break anything. So we shall first rehearse the move before we actually carry Rosemary's sofa outside. And we shall coach each other and make each other better. I'll give you another example. This other company gave, Derek did well, but Derek also Derek did well. And so the company gave Derek $100. And Derek was told, go to the mall and buy something and come back here and tell us what you bought. Show all of us, show and tell. So the issue is, you're using psychology to actually get more out of your stuff. So when Derek goes, buys a pair of shoes, he comes, shows all of us, and we all have a mama, oh, ow, ow, ow. And then we are able to actually work harder. And your name can then be put in a bin with other names, and then you spin, and then you win experiential rewards. This is the thing. In your compensation, you must factor in experiential. Research has shown that experiential lasts and creates more memories than monetary. Principle number 5, which is the last one, is sharing is caring. Now, we shall assume that you already have a fair base pay. But in what way can you, and for me, this one really made my day. In what way can you make sure that people stay with you longer in these days where people are just resigning left, right, and center? So if you had a bonus scheme in place, is there a way you can say that Dorcas's pay, extra, bonus pay is less than $1 million shillings, but in Q1 we shall pay her 10%. In Q2 we shall pay her 20%. In Q3 we shall pay her 30%. In Q4 we shall pay her 40%. Is there a way you can stagger this so that you are actually assured of, you're finding a way of having the person stay with you longer? Let me, or you could do it this way, that 50% is paid at the end of the year, but 50% vests for another year. So you stay with it, but it vests. That means you invest it for a bigger return. And people are less likely to actually leave the company. But you make people then act more like owners than employees. Let me give you an example of what this company called Outback Steakhouse did in the US. So when you interview with Outback Steakhouse as a manager, you pass the interview, and what they do, they tell you, now that you've passed the interview, you have to pay the employer $25,000. Like, whoa, okay, why? When you pay $25,000 to the employer, then the employer takes you on and gives you, for the next 3 years, world-class training. World-class training on what good restaurant managers are like. And there are certain targets that you work to hit. And when those are hit, after 5 years, your 25,000 has vested and now it is 100,000. Now, that's a unique form of compensation. It's a unique form of payment. When you know that turnover of managers is very high, and the number one predictor of a successful restaurant is the turnover of the manager. And so it is important that we retain the manager at the workplace for a long time, and we train them, but they also have skin in the game. Without skin in the game, they'll be like any other manager who underperforms at any restaurant in Kampala. Ladies and gentlemen, those are 5 principles about compensation. The book has been shared on the platform. Please buy it, read it, or listen to it. You'll be blessed. My role was to whet your appetite, and as you go into 2023, to really think about compensation and how you will uniquely compensate your people rather than treat everyone the same. A few comments we can have. Chairman, over back to you.
Well, thank you so much, Director Grace. People, the floor is open for questions and any chats for Director Grace. I just like to ask, I know you've shared a lot, yeah?
Yeah.
So my question is it wrong for me to pay people entirely based on commission, or is it still dependent on the industry? I know you've shared a lot, but let me still throw that back, because now I'm thinking twice.
It is not wrong to pay people purely on commission. Commission is good, and commission works when the person is in control of their job and they can do end-to-end management. For instance, if I'm going to do a commission job, then the idea of telling me when to come in and when to leave and which days to work, really, I am almost self-governing. So make sure that the commission is good at the end of the day to drive behavior, to change behavior and get the behavior that you actually want. But also don't make the commission so little, so small that someone would rather not come to work. I remember I had a boss when I used to work. He gave me a commission of 0.5% on sales. And the first month, I earned 70,000. I'd left a job where I was earning 300,000. And when I changed job, the guy gave me 0.5%. And I earned 70,000. I had a family. It was tight. So commission is good, but it had better be good enough. Make it attractive. Again, like we said, relative labor market value. Compare it to the labor market value. Yeah.
Okay. Thank you so much, Director. Then, what's your take on schemes? What is the I'm forgetting the exact term for it, but where you have workers, a saving scheme for businesses. We have had scenarios where people are saying a benefit scheme when the business cannot afford it. Are there any other creative ways maybe that were written in the book? If I cannot afford to say, here's your health benefit, or this is your retirement benefit, are there any creative ways that people have gone around that?
Actually, that's a very good question. Some companies teach financial management so that people are able to steward their finances very well. If you're not teaching people you're teaching your people how to invest their money or save their money, then you're doing them a disservice. That's number one. Number two, there are many vehicles that people use to, if they cannot create a benefit scheme, some people create an internal scheme internally, especially when you have many workers, then you can create one internally that serves your purposes. But there are many creative ways you can go around it than outsource it expensively. I know for us, because we deal in healthcare, what we did was to create an internal health insurance scheme, because we know the cost of drugs, and so why go to the clinic and then bill us with your margin at the clinic? So, but what we do, we go to the clinic, which is a copay, then you come and then we give you the drug. So we will pay the clinic most of the money. So the employee pays 5K, the company pays the rest of the money in consultation, but then come and pick the drug here. because we deal in the drugs anyway. But there are many creative ways you can actually come up with ways of how to handle benefit schemes.
Thank you.
Derek, I see your hand is up.
Yes, Derek.
Director, good morning. Just to seek your opinion on something. Yeah, most organizations do what we call a comparator when they're setting up payment scales. What's the best practice? Because what they'll normally do, they'll get HR facilities to do a scale up on organizations within the same portfolio. But there is always a mismatch in terms of competences. For example, if a head of sales organization X competences are, say, good commercial acumen, experience in trade, and all those elements, then the other person also has, they're looking for different elements. Now, when you're going to do your salaries and your compensation values, what would be the standard measure? Do you go with the competence checks as a value, or you have a base role in terms of capabilities and roles displayed in the given sector?
Thank you, Derek. First, number one, you're breaking principle number one. Be different. If you're going to really ask compensation and you're seeing what your neighbor is doing, then you're not going to be different. To the extent that you want different results, find a way of coming up with a compensation that is unique. Let me give you an example. Since employees give employers a loan, okay, do you know that every company has an overdraft, even if you say you're debt free? And before you bind me, today is 31st, okay? And if you haven't done payroll, that means that the employees have given you an overdraft of their salaries. And this is what you're sitting on with that cash. Would you consider, for instance, paying them daily? Would you consider paying them weekly? Can you consider paying them, fortnightly? In a way that you have to be different, and you have to know your industry very well, so that that difference makes you very attractive. In a way, can you be different so that you repel those who will not understand your culture? That is why I forgot to give you this equation, that compensation is actually strategy divided by culture. So if you want to have a unique culture, and therefore you're forming a unique strategy, you're going to have a unique way of compensating people. If you're comparing yourself with a neighbor, then there you're being the same, and you cannot be the same and exactly win. But we're talking about winning and not necessarily increasing. So we're not talking about doubling your payroll. No, we're saying how creative can you be within the same resources, plus or minus? Would you consider paying people differently? Would you consider paying them nothing and maybe pay them at the end of the year? Okay, that's extreme. But can you be creative around your compensation system at the end of the day? That's my point. So any comparison with neighbor and sales and what and this the thing, then you've completely lost it and you've broken principle number one of being different.
Okay, thank you so much, Director. Our time is fast spent. We'll be back tomorrow. Director, I would just like you to please talk about the School of Practical Business Intense Week and then close us off, please.
Okay, thank you very much, Chairman, for reminding me. Tomorrow, Tuesday, Wednesday, Thursday, Friday, School of Practical Business will be open. It is wide open. The doors are open. Come and learn. Ignorance is a choice. Don't choose to be ignorant. Come and learn. It will be free. I will be teaching tomorrow. I know Apmo will be teaching on Thursday. Other people will be teaching on the various days, 2 to 5. Go work. First, go and work and make money. Go work up to 2, run across to Naria. Come and learn. Go back and work the next day. Make your boss a lot of money. He'll allow you to come again and again for School of Practical Business. Please utilize the chance to the administration has given you. Upmore and Pastor Kawesa, utilize it. They normally don't give it. So make sure you maximize the opportunity. Other than that, God bless you guys. Go compensate your people well. Think about how you can send compensation to get the most out of it. Thank you very much. God bless you. Have a very wonderful day.